Hey traders, welcome back to my channel. My name is Desmond Someone. I'm back with yet another video. This is going to be an updated version of our weekly outlook because what happened last time was I had already recorded the video even before the NFP numbers came out. So this was done I think on a Thursday, and the video was uploaded on I think on Friday or whenever. Can't really recall. Yeah, but I had already done the video even before NFP came out, and then that was why the chart looked a bit different. However, if you had watched all the way through to the end, you would have seen that it was exactly the same, the same direction. All right, so now without wasting any much time now, I just want to talk to you guys about supply and demand real quick. Then I'm gonna chip in obviously some pairs here and there. First things first, I need you guys to understand that BTC is headed to my target. Those of you guys that have been with me for the longest, I have been calling BTC out since $71,000 per coin, and then we're currently sitting at about 50. As at the time I'm making this video, at about $58,000 per coin, if I'm not mistaken, and then we have some more space to the downside at 40k for 42k per coin. Now, if it doubts me, you can head over to my channel, head over to my videos, and then go through all my weekly calls. I call that pair like every single week, all right? Because I went short on that guy since 71k. So long story short, first pair on my list would be the pound sterling. Now, when we talk about supply and demand, practically it's like those of you guys who have been in the game for don't know what we call supply and demand. It's a very, very simple concept. Probably taught in schools in economics as well. So I just want to talk about it here real quick. So this is where you have supply here, and then this is where you have a demand level. Okay, so now demand level, now price is just typically most times going to bounce in between this. All right, now whenever you have the demand level or the supply level being a lot more stronger, that is, you have more supply than demand, what tends to happen is that the market will just, the pair will just collapse totally, and then the reverse is the case. If you have a lot more demand compared to supply, the market will just rally all the way through the roof, and that is exactly what we've seen happening across the board for the pair so far. Without wasting any much time, so practically, let me just use the chart to show you guys some more things. So say for instance now that you're here now, so we can see we can spot a decent demand level here, just like so. So you can see that prior to breaking prior to this retest here, the market had to come on here and then retest this level here. This was where the first retest happened, a break above retest and then continuation to the upside. Now this was where the demand level was created here. Now mind you, a demand level is a level that is at the bottom that the market cannot just bounces off of to get, and then also supply is the reverse, is a level upwards where the market just bounces off of. So now you have this level here where the market broke above and then came back here to test it and then rally all the way through the roof. Now it came back again to revalidate that demand, which is something that I have spoken about countless times on this channel, is that whenever I have a level that has been broken out and then tested once, 9 times out of 10 times it tends to come back and revalidate that level for a bigger rally, and then also a bigger pullback. So this is exactly what is happening right here. So we have broken above this level for one, and then came back to test it, and then this is the second pullback, and then this was the main pullback that sent things through the roof. So if you look closely, once you see a level like this here, what you need to do is go ahead and mark out the zone here. Now this is just a method that you can use to trade without necessarily waiting for breakouts. So this is what you do. All right, so you go ahead and mark out, this is your demand level. Okay, now remember, this is a retest to the downside before it heads up. So this is your demand level. Now in between here, you have where the market comes in, stays in between. So this is practically liquidity here, and then followed by this sweep, and then this sweep came directly to the demand level and then rally from there. So this is just a concept that obviously is my course, and then I'm going to make a more extensive and way more detailed video about in the coming weeks. All right, so now without wasting any much time, now let's talk about what is happening in the market currently. So long story short, I called out this pair somewhere around here. I said somewhere around here. I said that I think that was 1.30448, and then I said specifically that we should see the pound sterling drop all the way to 1.2600. Now you might ask me, Desmond, why did you say that this guy it was going to pull back here instead of okay. I think the first target I had was 1.2800. Now the reason as to why I think this was here. So now the reason as to why this didn't hold was simple. Yeah. So we have like two different kind of supply and demand levels. You have the one that starts the entire trend, and then we have one that it pauses midway and then continues something like this. Now this was what started this impulsive move, yeah, and then this was a pause in between this impulsive move from point A to point B. So this one is not as solid as this one. Do you get? So this one is never really as solid as this one. You're better off. Okay, let me show you guys something real quick. Now back to where we started. Yeah. So this was what started this impulsive move here. This was it here. Impulsive move. Came back and then tested it. Came back. No. So now if you look closely here, you can see that if you scale down to the 4 hour time frame. Let me show you guys something real quick. So if you scale lower to the 4 hour time frame, you will look closely and see that even in the midst of that whole impulsive move, we had like a pause. All right. So and that pause wasn't just tested once or twice or three times. Actually, I think he tested it for 1, 2, 3, 4 times. Yeah. So now what happened here was this was where the impulsive move started. Yeah, this is impulsive move. All right, and the market came back. It started from here, so the market came back to test it, and then while continuing, it paused somewhere around in here where you see here. Now, obviously, we had a couple of pauses in between. However, truth is this you see the zone here, this whole demand level here, this whole pause before continuing upwards is not as solid as the beginning of the whole entire impulsive move. Do you understand? So whenever you want to try and use this concept, I strongly advise that you use the beginning of the impulsive move. Okay, now most times I'm not saying that that this approach is not going to work. Like using the one mid range is not going to work. It could work, however, it is not as sustainable as having the one come back and test at the actual beginning, the inception of the entire impulsive move. So you're better off in terms of profitability and sustainability, waiting for the pair to actually pull back deeper into the origin of the entire impulsive move. All right. So now, without wasting any much time, this was what happened here. You can see that the market came mid range, played around a bit, played around, and then it came and totally collapsed down here. Now you cannot really tell if the market is going to break down below or go higher from there, because now look, he gave you that little hope here. It came on here to same thing. It came on here, little green candle, played around, then rallied. All right, came on here again, big engulfing candle, and then it comes again, little candle. So you might wondering, okay, fine, since this level has held in the past 3 or 4 times, it's gonna hold now, and then you now go ahead and place your trade, and then you're stuck in red. All right, so you're better off using the actual origin of the entire trend, and that's what happened here. You can see that this was where the market came on to after sweeping liquidity here. So the market just used this whole point here to build a liquidity here. So after sweeping it, so it came on to balance properly at the actual demand level and then rally all the way up. So you can see how this went. It was just a very swift trade. One touch, two touch rally. All right. So it was quite simple and straightforward. So now moving on here, when you're trying to talk about the current demand level, okay, now this was exactly what happened here. So this level did not hold as I expected, as we all expected. This particular level did not hold, and then what happened was that we literally just melted below, and now we're currently playing around it. However, going by what the dollar index is doing at the moment, I do see this guy dropping a little bit deeper here, because now the extra just created a new fresh supply level, and you guys know that whenever a pair creates a new level, be it demand or supply, it tends to go back and retest that entire level. Right. So with that being said, if this guy if the SY has created a new demand level or a new supply level, rather, it is most likely going to go back and test it. Okay, so now this is exactly what's happening, and then also coupled with the whole with the whole geopolitical crisis going on here, you kind of like understand why the people are kind of playing out their money from the stock market and then from the dollar index as well. All right, so now if you look at this closely, this was where this whole impulsive move started. All right, now compared to this whole mid-range pause here. Now you might be thinking, okay, well, we had a pause here and then a rally. Let me go ahead and put my bar right there. Now look at what happened. We came in here and we just bled through the entire thing. All right, so now you're better off coming here to wait for the entire move. All right. Now, one thing I need you guys to understand is that sometimes you have to use your own discretion, because now if you look lower, we have an entirely fresh demand level here that has not even been tested yet at all. The market came on here, came close, and then blew through from here. So now it's a bit tricky to say. However, I do believe that these are the two demand levels that we should be looking at for, ideally. So we have the first one at 1.26500, and then we have the second one at 1.2500. And then subsequently, I'm going to be making videos about this concept a lot more, in the future. All right. So now the first demand level here is this, and mind you, whenever I call out these levels, I need you guys to understand that you have to be reactive. All right. I'm not saying that as soon as the peg gets here, start buying. You have to also watch out. This is one of the things that I teach in the course, that you must have your entry model. You must have certain criteria, certain conditions there before you actually pull the trigger on any particular trade setup. Because now this at the end of the day, these are all just levels in the market. All right, it can easily be blown through. So you ought to always have that at the back of your mind, that these are just levels at the end of the day. These are not like rock solid levels or like brick walls that cannot be broken. These are just levels. These are just zones, and they can be blown through. If that's been blown through in the past, it can happen again. All right. So this is just a level. Now, one thing that you need to understand also is that whenever the market gets here to 1.2612, which obviously is going to get here, you need to watch out for entry pattern, like entry criteria. First thing first being the bounce method, and then also the counter trend line method. You need to watch closely and see, okay, fine, what pattern is this market giving me? Am I seeing any engulfing candles? What is happening around the zone? Look, before this guy rallied all the way from here, he put in an engulfing candle, and then also this was like a flag pattern here. So it was a lot easier for us to just draw the counter trend line, and then have this guy rally all the way up, something like this. Yeah. This is it. Do you get it? So we had like a decent counter trend break and retest, and then engulfing candle. Yeah, this was the 4-hour engulfing candle, engulfed 1, 2, 3, 4. So this is just a signal of momentum. This goes to show that okay, fine, that the buyers are really strong at this level, and then they're looking to push price upwards from here. And you can now enter at the close of the breakout, either at the close of the breakout candle or at the close of the retest candle. Now 9 times out of 10 times, the market does not always pull back to retest a broken counter trend line. So what you do is at the break of the counter trend line, entries are made, and then stops are below structure. Now, guys, this is common sense. You have to always put your stops below structure. Always use structure. Set your stop loss and your risk parameters according to structure. Do not set it according to your accounts or whatever. Put your stop loss where your stop loss has to be. I cannot stress this enough. Put your stop loss where your stop loss needs to be, not where you feel like it should be. Put it where you must have a rock solid and concrete approach to trading. Do you understand me? You must have a rock solid and concrete approach. If your 1% is your 1%, let it be so. Put your stops below structure. I don't care how big, how wide. Listen, you can use $100 on 100 stop loss. It is possible. You get. So put your stop loss where they need to be. Do not try to be funny. Don't try to be greedy or anything. Because at the end of the day, what has happened is that the market will now come in and spike you out, take you out, and then now move in your favor. Now that is something that you don't want to experience at all, because I've been there before. So put your stop loss where it needs to be. All right. And also, before you get into any trade, wait for a reaction. Wait for a reaction. Wait for a bounce. Traders, we are reactive. I see people trading the fundamentals. It's just awkward. We are reactive. Okay, just wait for the market to find its level. Let it find its bottom. Okay, do not help it find its bottom. Let the market find its own bottom. Then once it has found its bottom, it is now ready to move. That is when you now enter. You don't enter when the market is trying to contemplate, should I go higher or lower? Wait for the market to bottom. Find your bottom, pound sterling. Then I'll be here to do things through them. Obviously, the DSY is going to keep falling, because I can see, it looks heavy. It looks heavy. All right. So we have a massive double top pattern, neckline has been broken. So it looks quite heavy at the moment. So it is definitely looking like it's going to keep falling. So you need to allow these guys, allow every other pair find their bottom, and then you can now come in and then smash things. And meanwhile, while waiting for those pairs, you can hop onto the crypto market. All right, it's quite volatile at the moment. So we have the BTC collapsing all the way to our take profit zone. We have Ethereum smash TP2, TP1, and then currently on the way to TP3. And I called all these pairs out here live in my previous videos. If you doubt me, you can always go over it and check. Now mind you guys, I'm so close to hitting 1K, and sincerely, I need you guys to get me to 1K this week. I know I can hit 1K this week. Just share this video, comment, like, and subscribe as well. All right. So the next pair now, before I leave the pound sterling here, it's like I said earlier, guys, it is simple. Allow the market find its bottom. Do not help it find its bottom. Allow it find its bottom. Once it is now ready to shoot, watch out for something like this. This is an engulfing candle. Now, this is not a zone here, all right, but this just happened mid here. So this is something that you want to be watching out for: a drop, a balance out. Okay, let it bottom and then give it that engulfing candle. Now this thing should only happen around a level. It should only happen around a level. So once you see this kind of thing happen there, now that is your entry signal. Entries are made at the close of the bullish engulfing candle. Then stops are below structure, and typically in this case, structure is below here. Structure is just below. This is the structure. So your stops, if you're going long here, it comes below here. All right. Now in this case, this is mid range, so it makes no sense to go long here. Let the market find its bottom here. Then if you see this kind of pattern somewhere around here or down here, entries are made at the bullish engulfing candle close and then stops below. Obviously, first TP is 1.30448, and then subsequently we should rally all the way to 1.32000, which happens to be that yellow bar right there. And then this also coincides with what I have been talking about, the pound card for a very, very long time. Here is, as you can see now the market looks as if it has found its top and it is now starting to be lower. You cannot see me going to try and short this guy from here. It is not going to happen. Right? Do not allow the market trick you into making you think that we have very, very limited opportunities. We have a lot of opportunities here. Do you get? So now this is the pound card, right? Ignore my too many lines here. So this is the pound card here. So long story short, we have been very, very bullish on this guy for a very, very long time. And currently now we seem to be overextended. Now this is the demand level that was created. Now first retest, second retest, rally. So whenever you have the market take out the highs like this, okay, whenever you have the market pull back, so this just how the demand and supply level thing works. So whenever you have the market pull back first, rally, then come back to retest the demand and then take out this high, like take out the high here, and then come back to test it. Now what tends to happen is that this keeps going higher, because this is just, it keeps on clearing, and creating new highs. So as you can see here, this was the first pullback. The high was taken out, and then it put back deeper into testing it, and then clear this new high again. So what we need to watch out for is for this guy to pull back deeper into this yellow bar right here, and then because this also lines up perfectly with the Fibonacci tool. And you guys know me that I never do anything without my fibs. All right, so you have this looking very, very decent and juicy right here. So what we need to see is allow the pound card balance properly at 1.73657. So once this is done, once it has found its own ideal bottom, we can now come and then blow things through the roof. This pair is very, very bullish at the moment, so I see no reason as to why you should looking for selling opportunities. Now, the reason as to why I do not advise you guys to go shorting from here is because this guy could easily rotate higher. He could easily rotate higher. This is a rising pair. All right, so you want to wait for it to find its own level, so that it's like a train station and a train moving. You don't go and stand on the trackway and then expect the train to stop for you. You wait at the train station. So in this case this is the station. So you have to wait at the 1.73657 region and then blow things through the roof. All right. Obviously your ticket is your capital, so preserve your capital at all times. Next pair now is Aussie dollar. Aussie dollar has been dropping. I think we had that interest rates drop. So this was this spike here. However, moving on, I still see this guy pulling back into the 0.6650 region before we collapse further. I see no reason as to why this should not happen. Although this pair is kind of like the most annoying pair that you want to be trading, even in recent times. I've not really been a big fan of this guy at all. It is just very, very indecisive. So I mean, even if you go on the weekly time frame, you can see things clearer. And we have been stuck in this range for a very long time, guys. Since 2023, yeah, we've been in this range, and we've been just bouncing up and down, going sideways. However, this is also looking like a double top. So I mean, it's yet to decide. Yeah, it is yet to decide. However, whatever thing that this pair wants to do, it is entirely up to it. I'll be back here when this pair is ready. But for now, it is not looking ready at all. It's looking very confused. The next pair on my list would be, let's talk about NZD USD. Hasn't really captured my fancy that much. I acquired this pair from here, obviously from this point here, and then it collapsed all the way back down here. Long story short, I mean, overall, we are looking very bearish on the higher time frame. Now this is the weekly time frame, yeah. So this is still looking very bearish. However, let me check something real quick. Okay, so we broke above this, and then we're kind of like breaking back inside. So this is stuck in a range at the moment. So it's either we wait for this guy to break below this green bar here, and then if this happens here, it bleeds all the way down to 0.55561. And then if you do manage to break above 0.6, which is a rounded figure here, we should see this guy, rally to this green bar right here. However, this was just a supply level play. You can see what I said. This was just a supply level play. When the market came on here, created a supply collapse, then the market came back up and to test it properly before continuing lower. So we could even see this guy drop lower. However, that would have to, be up to the 0.5873 region. If it can successfully break below here, then all well and good. We should see this guy bleed all the way to 0.55561. All right. So next pair now would be the nothing is really happening across the board for these pairs. I'm not gonna lie. It's just falling out of the sky. It's just dropping. For AED we actually broke back down into this range here with a double top. So I'm waiting patiently for a decent pullback to this neckline right here before we drop things on his head. I see no reason as to why you should be looking to go down on this guy. This is looking heavy on the weekly time frame. NZD nothing much, nothing much. So let's talk about gold. So for gold, I have been highlighting gold to the upside, all right, for a while now. And let me just go down to my daily time frame and then trigger something real quick. So recently we had gone long on gold right about here. Now, mind you, with this whole geopolitical event happening with this Iran, and all these prices happening here, you tend to see a lot more volatility in the market, especially precious metals like this, especially the stock market as well, and also obviously the cryptocurrency ecosystem. So we tend to see lots of fluctuations of price, rapid movement as well. Now, the month of August is generally regarded or seen as a month of low volatility. However, so far so good, that is proving to be a false narrative because these guys have been moving crazy. Now, if you look at gold close, you can see that this is even looking like a lower high from here. Can you imagine? All right. So this is even looking like a lower high from here, and then the market could even collapse further, even into 2,300 dollars per ounce. However, this is a solid demand level on a daily time frame. Went long from here, money was made, and then people just people just did that thing in my Telegram community once again, which the link is down below, and then also so I still have this level down at 2,150 dollars per ounce, which is a very decent level. However, from look of things, that will be entirely dependent on whether or not we do break below this $2,350 per ounce, or even this $2,300 per ounce region. Okay, so and then we have this ascending trend line here holding firm. So it's a bit of a 50-50. However, I do think that gold is going to blow all the way through the roof to $2,600 per ounce. All right, so that is like my prime target for this guy moving on. Yeah, so what we need to see is allow the market, like I said, for the pound sterling, a pound dollar, allow the market find its own bottom. Right, let it find its own bottom. This same thing has happened in COVID, which I'll be talking about in S&P 500 here. So this is just the market just trying to find its bottom. So allow the market settle down properly. This is the time where you're gonna see a lot of people make a lot of money. All right, so it's quite easy. It's quite simple. It's quite easy. So now let's hop on to another pair entirely, which happens to be silver. Um, for silver, yeah, I have been calling silver from this point. Yeah, hold on real quick. I have been calling. I have been calling from. I've been calling out silver for a very, very long time now. I've been saying that this guy has to pull back to this $26 per ounce region before we blow things through the roof all the way to $35, per ounce. And this is exactly what has happened here. Now, mind you, this was just a minor supply level play that we had here. Just a quick one here. It was pretty decent, pretty easy. All right, so the market was falling, and then he had already created a supply level here, and then it dropped from there. So this was like a pullback, and then continuation to the downside. All right, so long story short here, we are almost at a POI, which is our point of interest here, which is $26.487 per ounce for silver. So what we want to be looking out for is exactly what has happened here in the past. Just scroll through to the past, you can see a decent bounce off here, rally, come back and balance up before we continue higher. All right. So this is how it looks. This is how it looks. It's very, very simple to do. All right. So just wait. Like I said, a lot of the market wave and curve. Now, in this case, that we do not actually have a decent wave pattern to work with here, you might have to work with a bounce method. All right. So what you need to see is a 4 hour or a daily bullish engulfing candle. Now, let me scroll up to the daily time frame and show you guys how this can happen here. So for the entry here, it was quite simple here. So we had like the first pullback here, which was a little more visible on the 4 hour time frame, and then the second pullback here, which came through with a bullish engulfing daily candle. Now this is where you want to be making your entry. This is a bounce method. This is the bounce method here. All right. So this is where you enter at engulfing. So the candlestick that bounces off of that zone has to be an engulfing candle, either a daily one or a 4 hour candle. Just making an engulfing candle. All right. So that's what happened right here. And entries obviously made here, stopped below here, and they rally all the way up. Now that you've actually come to take out this high here on a high time frame. Now, mind you, this is happening on a high time frame. Highs were taken out from here, and then the market came all the way back down. So now whenever you see things like this happen here, we tend to blow through the roof even higher to new highs. All right, so that's just the concept of this supply and demand approach here. And now long story short here, if you even scale up higher, just zoom out a bit, you can see that this even look like a double top pattern here, which I don't think is going to hold, because if you look closely, what's currently happening on silver is an inverse head and shoulders pattern. Here we have the head, shoulder. This was a neckline that got broken out. We tested once, and then this was the decent pullback. And then this pullback lines up perfectly with what we call a Fibonacci 2, which I use in like every single second. So you can see that the market is just playing according to the trend. Now this double top here is just simply a reversal chart pattern here to let you guys know that the market was actually due to coming back to test this $26 per ounce region. So now that this is done and already, so what we need to watch out for is how the market reacts to this whole zone. You can see that upon getting here, it kind of like just rejected. However, this is not enough. We need to see the market settle in properly, let it relax, let it romance the level, marinate properly, and when it is just about to kick off, that is when we now come on here and place at. Obviously, they're not placing trades on the daily time frame. We scale down even to the 1 hour time frame. The key thing is just have the tightest possible stop loss, but according to structure. Now, mind you, tightest possible stop loss, and then catching and then allowing the market to work for you. So in this case here, we have silver here, which is currently rejecting off of the $26 per ounce region. So once all this is said and done, and then we have a decent balance on this level here, we can now come and then start taking things through the roof for silver. First level target for silver, once if this level holds, first level target is 32.512 dollars per ounce, and then subsequently we could rally to $35 per ounce as gold rallies. All right, as gold rallies, guys, take notes, as gold rallies. Okay. All right, so without wasting any much time, now let's see what other pairs we could talk about. Let's talk BTC. BTC is just collapsing all the way through. my first TP, which was $56,000 per coin actually, and then it is currently headed to my final level target, which is 40K per coin. However, long story short, we could even see a pullback here. We could actually see a pullback into this, this whole broken level here. And if that happens, all well and good. If it doesn't happen, well, it has happened. It has moved. However, long story short is that we were right on our calls. All right, I called out this pair, but by the way, all the way from here, all the way from 71K. Now, if you doubt me, you can always go back and check my previous videos. I called out this guy here. We went short on this guy, and then my prime target has always been 40K per coin. 40K per coin or nothing. All right. So I'm putting it out again for you guys to hear properly. The bloodbath is still on, the dip is still on, the dump is still on. We are not done. This guy has to find a bottom. All right. This guy has to find a bottom. So allow the market find. So for those of you guys, crypto boys, crypto girls, that are looking to buy the dip. This is not the dip. All right. So wait, it's going to go deeper than this. So just wait for the market to find its own bottom around this 40K region, and then you can start playing things through the roof if at all the 40K level holds. Because if it doesn't hold, because once I switch things up higher up a time frame, you can see what is happening currently here. All right, so it's not looking good at all for BTC, and we still have some space to the downside at around 40K per coin. However, for you that are looking to day trade this guy here, just wait for the market to pull back into this neckline that was broken here. Maybe 60K, maybe just somewhere around here. But we have to see a decent pullback before we actually hop on any trading opportunities on this guy. Long story short, Ethereum is also on. I think Ethereum smashed first two level targets. Let me just talk about it real quick, even though this is like common knowledge. I have been calling this pair ever since. All right. So long story short, let's see how it is looking like on the weekly time frame. Guys, please disregard the lines I've drawn here. They just help me, make better entry decisions. All right. So now scaling down to the daily time frame here, we have this supply level that I kind of spoke about here, and then this is how it looked. Okay, so on the way down here, it created a supply level and then collapsed and then came out to test it, like I said earlier about the pound sterling here. So this is what's happening currently, and we've actually blown through the first TP target and the first TP, and then currently sitting on the second TP. However, now we could even see this guy pull back, to this $2,800 per coin region before we actually continue lower, because now this is a double top here, and then this was that thing that I spoke to you guys about, that whole approach where if the market gives you a range, typically a double top or whatever chart pattern, it tends to move back after breaking or before even breaking the neckline. It tends to pull back at least half of the entire length of the move before even continuing lower. Right? So that in this case, that was exactly what happened here. So notwithstanding, my targets remain the same. First TP was smashed at $2,800 per coin, and then subsequently we ran into 2,192, and then finally we should see Ethereum at $1,600 per coin. And if this level doesn't hold, it's gonna be nasty actually. All right. Next one now. Let's talk about the yen pairs are still trying to find their own bottom as well. Like I spoke about earlier. All these pairs have to find their own bottoms. Crude oil on the other hand as well is just, despite the whole uneasiness, all right, in the Middle East, it's still looking like it's gonna collapse further. For oil right now, I choose not to trade it at the moment. Now, mind you, I called out this pair from $84 a barrel and then all the way back down here. This is where we are. TP was smashed here actually at $77.782 a barrel. If it does, you can go over and check my previous video, or even just scroll through my Telegram and see all the trade calls we've had. Now, guys, before I forget, guys, please subscribe to my channel. Get me to 1K. I'm currently at 970 something subscribers, and I need you guys to just push me over the line to 1K, guys. You can see how much value and how much effort I put into this, and I know that you guys have really helped my channel from zero subscribers to 100, from 100 to 500, and now we are currently at the brink of clinching into the 1K mark. guys, I kid you not, this means so much to me. Just help me spread the news. All right, send this video across, post it on your Twitter pages, on your Instagram, on your Snapchat stories, whatever thing you use. Just make sure that this gets across to so many people, and then help me get me to 1K, guys. Get me to 1K, and I promise you guys, I'll come on here to give you guys the full course. Like I said earlier, I mean, you guys are yet to decide what you want. Do you want to give away, or you want me to give you guys the full course? Like, do you want monetary giveaways, or you want me to give you guys the full course? Let me know what you think. However, I think it would be a lot more beneficial to you guys if I just teach you guys how to trade. All right, which is obviously what I do here, though, if you have to be paying attention. So let's talk about Nasdaq real quick. Recently, we saw that Warren Buffett has been selling a lot of his stocks. um, well, it happens. All right, it happens. Key thing here is that we are seeing a total crash on the across the stock market. We'll have the Nasdaq, and then also have the S&P dropping, and then followed by the DAX index. So this is 1, 2, 3, 4. So we have now this is what I was talking about here. This whole demand and supply level thingy. We have the pause, mid-range, and continuation. We have this was the actual demand created, then a pause, mid-range, and continuation. Now, most times this one doesn't hold, right? And it tends to make a lot more money when you see this one here, because market tends to fall back deeper and then sweep the liquidity of those that actually went long here, and then balance out properly at this point. Now, I'm not saying that this is going to hold, because I mean, obviously there is really so much uncertainty in the world as it stands. However, if I plot my trend lines like so, you can see that we're currently bouncing off of this trend line here. And then also, if I just get rid of this thing and then bring it lower, you can see that this is where my demand level stands at the moment, and then this is where the market came and then played around. So let's go lower to our daily time frame and see how it looks. From the daily time frame perspective, this is where we stand at the moment here. This has been an impulsive move here, right from $14,000 basis points. We've been heading higher and higher and higher from there. And if you bring your fifth, like so, you can see that this is where the market is currently balancing out properly, which happens to be my trend line, happens to be my demand level, happens to be my Fibonacci as well. So I mean, once again, we need to see the market, balance out properly. A rejection candle is not enough for us. We need to see a decent balance. You see, before the market rallied here, it balanced properly. It balanced properly. You get it balanced properly. So allow the market just find its bottom. Once it finds its bottom, you will always know. All right, you will always know, because you're gonna be watching out for engulfing candles at all times. All right, so allow the market find its own bottom. So once this is all set and done, then you can now start thinking about going long on this pair right here. I kid you not. The thing with the stock market is it's largely based on sentiment as well, because people believe that stocks are ever going to go up. So any pullback you see is practically just any downtrend you see is practically just a pullback. Now, same thing happened in COVID 2020. Let's pull up the COVID chart real quick. So this was in 2020, yeah. 2020, this was 2022. So I think that was a lot more obvious on, okay, yeah. So this is it here. So we had the entire market just fall out of the sky here, and then this was where it happened. Yeah, this was the COVID 2020 move. However, one thing that you also need to understand that is that prior to this whole thing here, we had a demand level here, a solid demand level. So the market was just giving us a decent pullback. So you see how geopolitical events just kind of like lines up perfectly with what the chart is doing in real time. We have like a demand level here that had to be retested, and what the market did was just pull back, because everybody thought that the war was going to end. However, this was what happened here. The market was just coming in to fill up a proper balance for a normal demand level right here, like so. So long story short, this is exactly what is happening here after an impulsive move. And you guys have seen how this pair moves. It's just it's just in a very steep uptrend. Even if it pulls back at all, it just comes for a retest and then just continues higher. You get, it just comes for a retest and then just continues higher. So in that case, this is what's currently happening at the moment. So we should see this guy, balance out properly here. If this level is gonna hold, we should see this guy balance out properly at the $17 basis points, and then from there we should now rally higher. Now, in the event that this doesn't hold up, here once again to let you guys know, because this is what I also do. So I'll come in here every single weekend and most times weekdays as well, to kind of like update you guys on what is happening across the markets, across the board for the market. All right. So next panel will be the S&P 500. So the S&P 500 too has a similar setup here. So we kind of like have all these pairs falling out of the sky, looking like the world is gonna end and whatnot. However, this is just a pullback here. I do see this guy heading higher in the nearest future. I do see this guy heading higher. So you don't have to panic. Like I said, you just have to wait for the market to find the bottom. Allow the market to balance out properly before we now think about going long on any single pair whatsoever. All right. So this is just what I believe is happening now. We could even see this guy drop lower here to this point, because if you look closely, let me show you guys something real quick. So we had like an image head into this pattern here happening around here. So this is more or less the head, shoulder, and then this was the neckline break. All right, so we could see this guy drop even lower to 4,600 basis points. Let me see something like this. So we have, this is the impulsive move from the swing low to swing high. You can see how it balances properly here. All right, so the markets could still be headed lower, in the coming week or two, and then balances out at the 4,600 basis points, and then we now continue higher. Now, this was the mid-range, what's it called, mid-range demand, which most times it fails, right? So you need to watch closely and see, because similar thing happened around here, yeah. When the market was actually ready to head higher, it came back for a pullback, and that pullback came back to the actual origin of the entire impulsive move. It did not come here, although it did here, stopped here, paused a bit, then headed higher. However, it gave us a lower high from here and then continued to drop. Now, if you look closely, this was where this whole impulsive move has started, and then if you bring your fibs just like so, you can see that from swing low to swing high, it balanced out perfectly. All right, so it is a no-brainer here. I see no reason as to why this guy should not collapse all the way to 4,800 or 600 basis points, somewhere around here. Balance out properly before you now start thinking about heading higher on this pair. Long story short, let me see if we do have some trend lines to work with. You can see that after I think this was the COVID pullback here. All right, so this was the first COVID pullback here, and you can see that after every deep pullback like that comes a very steep uptrend. Let's see how things look with the trend line. So let me see if I have something to work with here. So we have the first touch, second touch, third touch, obviously. So yeah, the market could easily be pulling back into the 4,600 basis points, and then now rally all the way from here. Okay, so this is a very, very decent level to watch out for. We have swing from swing low to swing high like this. So everything is still pointing upwards at this point. All right. So all we have to do is wait and see how the market balances out properly. If it does balance here, all well and good. However, I see this as a trap as well. So we could see this guy drop even lower to 4,600 basis points, and then we now rally all the way higher from there. For the DAX is also doing the exact same thing. DAX is pulling back. So all of these pairs are just using this whole period to pull back and just inform you guys that once it is time to blow through the roof, that it will not hesitate. All right. So we have on our hands here and inverse head and shoulders pattern here on the DAX index, where you have this this head shoulder pattern here, and then we had the blowout. All right, so this was the first blowout here, and then this was the pullback. So the market could easily come back to balance down here or even lower. However, I do see this guy balancing properly at the 16,500 basis points for the DAX index. So once this all said and done, I'll be back here on this channel to let you guys know how to cope, and then how to navigate the waters when it comes to the stock market. I see no other pair to discuss here. CAT CHF, all these CHF pairs are just dropping. So for the yen pairs, like I said earlier, all you have to do is just wait patiently for these guys to find their bottom. Be it CAT JPY, be it Aussie JPY, be it whatever JPY pair, just allow the pair find its bottom. All right, you can see here, this was where this whole origin of this entire impulsive move here. So if I bring my fibs like that, you can see that it balances properly. So this could even be the turning point for the pound yen. However, now once again, entries are not made on the daily, the weekly, or the 4 hour time frame. We scale lower to even the 1 hour time frame to find a very decent entry opportunity, and then write things through the roof. Now, for this kind of entry here, you want to be using some extra confirmations, like allow the market find the bottom and bounce off of it. So now this was what happened here. This was the bottom here, obviously, but you have to also put something in here and say, okay, fine, you're only gonna be going long on this guy if you see a decent break back above this 185 region and balances out here. Then entries are made there and then stops are below. All right, so easy peasy for the pound yen here. We could easily rally all the way back to 208 region. I see no reason as to why that should not happen. If and only if this 180 region holds, if it does break below, then this obviously this setup is invalidated. However, if it holds, we could see this guy rally and then rotate all the way from here to 208.10. For Euro JPY also has a similar scenario here, where every yen pair is just pulling back now at the moment, and it's currently at the beginning phase of their entire impulsive move. Yeah, so this is currently sitting at this demand level here. So what you need to do is just wait patiently for the market to decide, is it going to rotate from here or even drop lower. It is entirely up to you. So once this is all said and done, yeah, wait for the market to break back above 160 region. This is the 160 region here. Then entries are made. Then obviously, sorry guys, obviously entries are made above this 160 region, and then stops are below here. Long story short, I don't see any other pair worthy of my mention. I don't see any other pair worthy of my mention. Let me see if the dollar yen is actually looking. So this guy is looking like he wants to drop all the way here. However, I do feel like this guy was just coming for this demand level here. All right. So long story short, I'm still cautiously bullish on these pairs. It's just that I have to wait for the market to pull back all the way up. All right. So because I see no reason as to why I should go long on these pairs around here. I need to see the market, rise all the way back above this 152 region before I now make my entries. Because now this could easily surface as a fake out, and you guys know that once a fake out happens, market tends to move exponentially in the opposite direction. Yeah. So that's just that's what I think about. I think about this whole thing here. So once again, I'll be back on here to kind of like shine more light on these pairs. I see nothing. There's absolutely nothing to rush about. We have BTC, we have Ethereum, we have oil, we have the pound card, the pound dollar, we have the DAX index, we have Nasdaq, and we have S&P 500. We have gold, we have silver. So you want to be focusing on those pairs while you wait for your for a regular traditional currency pairs to kind of like line up. All right. So guys, I think that is the end of this episode here. Thank you so much for sticking through to the end. I just felt like talking to you guys about supply and demand today, and obviously shining more light on what's happening across the globe. So the reason as to why the stock market is crashing is because of the global fear of recession. All right, everybody's afraid, and they're starting to pull out their monies, and these things happen. So whenever think that this happened here, and whenever there is a recession, people tend to panic and take out their money and then dump it into safe haven assets like gold and silver, which kind of like reinstates my whole approach, my whole standpoint, my own view, which is I'm bullish on silver long term, I'm bullish on gold long term. However, silver seems to be like the one who is actually finding its own bottom quite early for us to actually kick things off. All right, so thank you so much for staying true today. And once again, make sure you subscribe, like, and leave a comment, and spread this video across every single social media platform. Guys, I need to get to 1K. At least bless me 1K. All right. So thank you so much, guys, for staying tuned today. And once again, my name is Desmond Samuel, and I'll see you guys in the next video. Peace out.